More and more people are using cryptocurrencies like Bitcoin, BTC, and Ethereum, ETH. Nonetheless, newbies may find the complexities of the crypto realm overwhelming. Cryptocurrency is already widely used and actively invested in by many people. Yet why? What advantages do cryptocurrencies offer? That might all be a little perplexing if you're on the outside looking in. All of the possible advantages of digital currency will be covered in this video. The two primary areas that it will cover are the advantages of using cryptocurrencies and the potential advantages of investing in them. But first, subscribe our YouTube channel to watch more amazing and informative videos like this. Cryptocurrency. What is it? Digital currency includes cryptocurrencies. Although there are countless more cryptocurrencies, Bitcoin, BTC, and Ethereum, ETH, are the two most well-known. A cryptocurrency is comparable to other forms of money. The distinction is that cryptocurrency is decentralized and digital. Decentralized systems are those that are not supported by a central authority or government and are instead directly run by the users of the underlying technology. The technology behind cryptocurrencies is called blockchain. Blockchain is a decentralized platform that keeps track of all network transactions. When someone gives Bitcoin to another person, a record of that transaction is stored in the public blockchain and is independently confirmed by many users. Transactions involving cryptocurrency are kept secure, legitimate, and transparent because to this dual record keeping, the identity of the people who take part in the transactions are kept confidential, despite the fact that each transaction is recorded. In other words, anyone can view the amount of Bitcoin sent, but they are unable to view the parties involved in the transaction. A cryptocurrency built on the blockchain. The majority of cryptocurrencies are utilized primarily as investment vehicles, even though they are theoretically designed to be a form of money. Investors purchase cryptocurrencies like Bitcoin and Ether because they anticipate an increase in value over time. Advantages of cryptocurrency use. Simply said, cryptocurrency is a form of money. Theoretically, a given blockchain's underlying token, Ether for Ethereum, for example, is intended to be used to cover transaction fees on just that blockchain. Tokens can, however, be used to pay for goods and services as well. Individual users of cryptocurrencies can benefit from quick transaction times, security, anonymity, and simple cross-border payments. What you should know is as follows. Security. The term cryptocurrency refers to a method of securing cryptocurrency networks known as cryptography. As long as it is used appropriately, cryptocurrency is fundamentally safe and secure. Transactions on this decentralized network are always secure since numerous independent participants independently verify every transaction. A flag is raised if there is a discrepancy in the records. As a result, spam and fraudulent transactions are kept out of blockchain networks. Bitcoin on a blockchain. Having said that, cryptography is only as secure as its users decide. Users risk losing their assets if they divulge their private keys to fraudsters or other third parties. Privacy. Most networks allow anonymous cryptocurrency transactions. Every user is given a special public ID, usually consisting of a random string of letters and numbers. Nonetheless, the individual's privacy is safeguarded because this public address is not directly connected to their true information. Governments are becoming more interested in regulating cryptocurrency due, in part, to the increased privacy it offers. Timely settlement. Crypto transactions are finished instantly or in a matter of seconds on many networks. This contrasts with typical bank transfers, which may require several days to settle, and it is clear why transaction speed is a significant advantage of cryptocurrencies. Be aware that with some cryptocurrencies, transactions may have some lag time when the network is busy. Low prices. A tiny fee will always be incurred when transferring or using cryptocurrencies. This is sometimes known as a gas fee or a transaction fee. The fee supports the network and is dispersed among the users who contribute to maintaining the decentralized blockchain network. Cryptocurrency can be less expensive than conventional payment infrastructure, especially when compared to conventional international payments. There is one exception, though. Fees have escalated as these currencies gain popularity. Fees for some networks, like the well-known Ethereum network, can become quite costly when demand is at its peak. Many cryptocurrency developers are developing novel strategies to reduce costs. International payments. Cryptocurrency makes cross-border transactions easy and affordable. In the past, sending money from one country to another required using a middleman, such as Western Union, or planning a costly international wire transfer through your bank. With cryptocurrency, sending money to your neighbor or to a company on the other side of the world incurs the same cost. Also, there is no paperwork or red tape to deal with. Advantages of cryptocurrency investment. Investing in cryptocurrencies has a number of possible advantages as well as some special hazards. Diversification, the potential for huge returns, and availability to trading around the clock are a few of the main advantages. Diversification. Spreading out your investments over many asset classes is the idea of diversification, which lowers risk. The majority of investment professionals concur that building a diversified portfolio is essential for long-term success. Use cryptocurrencies to diversify. Investors should select assets that fluctuate independently of one another to diversify a portfolio. It can be advantageous to blend equities, bonds, cryptocurrency, real estate, etc. In the past, the prices of cryptocurrencies have generally moved apart from those of other asset classes. Long-term investing strategies can be balanced out by include a small amount of cryptocurrencies in your entire portfolio. Protection from inflation. Some cryptocurrency experts contend that digital assets like Bitcoin and Ethereum could act as a hedge against inflation. There are only so many Bitcoins and Ether tokens that can ever exist, according to this theory. The price of one Bitcoin or one Ether grows in dollar terms when inflation rises and the worth of a dollar declines. Yet, this is more speculative than confirmed. The history of cryptocurrency is too recent to be able to determine whether or not it can be utilized as a long-term inflation hedge. Possibility of disproportionate gains. In recent years, cryptocurrency has generated incredible gains. It's hard to say if this pattern will persist, though. The graph below compares Bitcoin's BTC 5-year performance to that of the S&P Wink with tongue sticking out 500 index fund, which is a collection of the 500 largest companies in America. Stock market gains versus Bitcoin. Bitcoin has returned a staggering 416% over the past 5 years, as opposed to 67% for the S&P Wink with tongue sticking out 500 index. As compared to the entire US stock market, BTC has about a 21x better return. The outcomes for Bitcoin are even more astounding when you zoom out even further. In other words, during the previous 5 years, investing in cryptocurrencies has outperformed investing in stocks, albeit only time will tell if this trend persists. However, because cryptocurrencies are also a very erratic asset, any possible gains will depend on various market conditions, transaction fees, taxes, and other elements. 24/7 availability of funds. As cryptocurrencies are quite liquid, it is simple to exchange them for dollars or other cryptocurrencies. In actuality, crypto markets are open 365 days a year. Investors have options thanks to liquidity, which also enables them to make trades when and how they choose. Less liquid assets are becoming commonplace. For instance, just 5 days a week during regular trading hours do stocks trade. Real estate, for example, is a far less liquid asset and may take weeks or even months to sell. Is buying cryptocurrencies a wise decision? The answer to this issue is dependent on a person's plans, goals, and risk tolerance, just like with any investment. Looking back at recent events, it is quite evident that some cryptocurrency tokens have occasionally made for outstanding investments. Past performance may not, however, indicate future results. Individual investors must ultimately determine if cryptocurrencies make sense for their portfolios. Cryptocurrency assets should only make up a modest portion of your overall investing portfolio if you have a low risk tolerance. In other words, invest in a variety of stocks, bonds, properties, and perhaps some cryptocurrency as well. Don't just invest in cryptocurrencies. Managing the dangers associated with cryptocurrencies. The term cryptocurrency is a broad one. Keep that in mind. Many cryptocurrencies are present. Historically, the major tokens, like BTC and ETH, have been quite stable. Coins with a lesser reputation, also known as altcoins, are significantly riskier. Consider Bitcoin and Ethereum to be the household names of the stock market when comparing them to other major currencies. Although they might lose value, they are not likely to disappear completely. Altcoins can easily lose all of their value because they are more like penny stocks. Conclusion: there are numerous advantages of cryptocurrencies to consider. As with any asset class, investors' decision-making abilities are improved by their increased knowledge of the underlying asset. So let us know, what do you think of cryptocurrency? Also subscribe to our channel before you leave. Thanks for watching.